given the markets that we find ourselves in right now, what's your latest thinking on the technology sector and how you're going to play the uncertainty of a trade war?
Yeah, look, nobody holding stocks right now is comfortable, especially tech investors. Tech, it will overweight impact from tariffs, whether it's the electronics, the data center equipment. We're talking hundreds of billions in imports every year that could be impacted. Ultimately, though, the market can top on good news and it can bottom on bad news, meaning we're seeing SMH semiconductor ETF up 5%. Despite the threat of up to 100% or higher tariffs in China. Not confirmed, but you've seen some activity over the weekend in that regard. What that means is we are positioned for a bounce. We think that we're in extreme oversold conditions. If you look at the sentiment reading, retail has almost never been so bearish. It's more retail is more bearish than COVID and more bearish than 2009. What that means is the market is oversold. We are positioned for a bounce, and that bounce may or may not continue onward, meaning we still remain cautious, even with positioning for a bounce.
So forgive me, Beth, have we or have we not hit the bottom in tech?
It is not likely we've hit the bottom through all of the damage that was done last week and the damage that we could see this year.
So, Beth, we turn to you when IO Fund has outperformed most benchmarks for the last couple of years, and indeed a lot of the other tech-focused funds. Do you make the most of these valuations, just go very focused on individual names and just withstand the volatility, or do you wait for a better outcome? Do you wait for more clarity from President?
It's a little bit of both. We layered in on Friday and Monday. The reason is it's clear to us probability favors that bounce. That bounce is very important for a tech investor because of the damage that was done. You have to capture that bounce if you're going to compete on an annual basis like my firm. And therefore, capturing that bounce is key. De-risking on a bounce rather than during capitulation is everything to a tech investor. Being very strategic. So de-risking on that bounce is key to the performance this year.
It's interesting, Scott Bessent, of course, Treasury Secretary, has time and time again said this isn't a MAGA problem, this is a Mag 7 problem. The NASDAQ peaked back in February. This is actually about DeepSeek. And to that point, we've seen pressure on chip stocks running into this tariff crisis. We were worried about an AI infrastructure bubble. How much have you been paying credence to that, or was the market getting that wrong too?
It is a Mag 7 problem. We hold very few Mag 7 stocks because of the outsized spending on CapEx. You have to think about, is the schedule for depreciation on servers, is that even accurate? Is it really going to be a 5 to 6 year depreciation schedule? That matters, because if it's not, and it's more brief due to these Blackwell systems coming out, and then Blackwell Ultra, and then Rubin, we can see more effects on the bottom line, meaning they're the customers. That is not typically the way the Mag 7 was constructed. And that piece is important to understand. There's a shift in how big tech was the producer, but now it's the customer.
I saw you say on X the other day that AI needs compute, and when it comes to compute, NVIDIA is the gold standard. So if you don't hold many Mag 7 names, do you hold NVIDIA? How do you see NVIDIA's ability to continue its trajectory in this environment?
NVIDIA is the exception. NVIDIA is the beneficiary from all of this CapEx. Very low China exposure. There's a semiconductor exemption to the tariffs. Of course, there would still be some impact, but by far the safest stock in the market today is NVIDIA.